Wow. So it looks like Canfin Homes had a busy end 2024, huh?
Yeah, actually, they've released quite a bit of information, it seems, with board meeting outcomes, financial results, and investor presentations.
Right? They approved their unaudited financial results for the third quarter and 9 months ending December 31st. It seems like they had some solid growth.
Definitely, their loan assets grew by 9% year on year, reaching 37,155 crore rupees. That's a pretty significant jump.
That's impressive. And their net profit increased by 6% compared to the same quarter last year, landing at 212 crore rupees.
A steady climb, but it also mentions that disbursements were flat compared to last year, which is a little surprising.
They had a dip sequentially, a negative 21% dip from the previous quarter because of some registration issues in Karnataka, apparently due to e-Khata requirements.
That's a good example of real world regulations impacting a company's numbers. It's like trying to drive a car when the roads are under construction.
Exactly. And it's something they'll likely have to navigate. So, what else is interesting?
Well, they've got a pretty decent net interest margin. It's around 3.72%, and their return on assets, or ROE, is about 2.25%.
Okay, so those are some key profitability indicators. What about non-performing assets?
Their gross non-performing assets are at 0.92%, and net non-performing assets are at 0.50%, which is pretty controlled. It's good to see that they're managing those well.
Right. So they seem to be balancing growth with asset quality. It's like walking a tightrope. You need to stay balanced.
Precisely, and their debt to equity ratio is 7.08. So they're leveraging their equity appropriately, it would seem.
They also talk about maintaining a 100% asset cover on their secured non-convertible debentures. That sounds important, right?
Oh, yeah, that's critical for investor confidence. It shows that they've got sufficient assets to back their debts. Think of it as a safety net, for their liabilities.
Okay, and they've also approved a general information document and key information document for issuing more debentures and commercial papers.
Right. So it looks like they're gearing up for further fundraising activities to support future growth.
Now, looking at the investor presentation, it seems like they're focused on expanding their digital presence as well.
Yeah, they're working to enhance their digital capabilities for a more seamless customer experience and to improve internal processes.
It's like upgrading the company's infrastructure, to support future growth and efficiency.
Exactly. And it's clear they're looking for more direct sourcing channels so that they can grow their loan portfolio even further.
So they're expanding their reach too, mentioning 219 branches across 21 states and union territories. That's pretty good coverage, right?
Absolutely. It's a solid footprint across India. They also mentioned a diversified sourcing channel with direct selling agents, or TDSDS, accounting for a large share of the business.
So they're not relying too heavily on just one method for loan origination. I mean, that makes sense.
Precisely. And, they highlight their consistent management support from Canara Bank, which I think provides stability to the company.
Yeah, that parent company backing always helps. I mean, it brings a certain level of credibility.
It does. And it also seems that they are focused on maintaining good corporate governance.
And, they're also stressing their risk-based evaluation of borrowers and a transparent lending process.
Right. And those are key to maintaining the quality of their loan book, right?
Yeah, that's a good point. They're really focused on not just lending money, but lending wisely.
Definitely. The company is showing a good balance of growth, stability, and future planning. It's like a well-oiled machine trying to get even better.
It's interesting how they're managing both traditional lending and also incorporating technology, which is like merging the old world and the new.
Right. It's all about adapting and optimizing. Plus, their constant focus on compliance and audit factors shows a responsible approach.
All right. So before we wrap up this segment, what would you say is the overall picture we're getting from this information dump?
Well, it's clear that Canfin Homes is focused on sustainable growth with an emphasis on good governance, asset quality, and digital transformation. It's like they're building a sturdy house, brick by brick, with an eye on future expansion.
That's a good way to put it. Also, it looks like they've also declared no deviations in the use of funds raised via shares or non-convertible debentures.
Yeah, they're following their stated objectives, which is reassuring. It shows financial responsibility.
So overall, it seems like a fairly stable and forward-thinking company.
Right, and they're trying to ensure that they are also focusing on products that are environment friendly, which is quite good.
You know what else is good? It's that our listeners are engaging with this podcast. So if you're enjoying this and want more insights like these, be sure to like, share, and subscribe to our YouTube channel.
Yeah, it really helps us out and it lets us know if we're doing a good job.
All right, so now let's move on, shall we? What's next?
We could delve into their sector specific ratios and then perhaps talk about their covenant compliance certificates, for a deep dive.
Sounds like a plan. I'm ready when you are.